Hey there, good morning, everybody. Welcome. It is a few minutes after 11 a.m. Central Standard Time here on, Friday, the 26th of February, 2021 in San Antonio, Texas. Going to do our usual couple of time a week markets update, looking at them, seeing what's going on here. So good to see y'all checking in. We've got Aramis here already, Hank's here. Thomas Payne, he says, morning all. Yesterday was a bloodbath. I think this is the start of reckoning. It's possible. It's possible. We don't want to get too excited. What I mean by excited is not happy it's going down, but just, emotional about the possibility to short strongly or anything like that. So we'll wait and see. We'll talk about that here across because all the different markets are kind of dropping off through this week. They've started... when we did it Tuesday, we were talking about how they were starting to drop then. The question was, should we be concerned or is it going to be short term? And here we are at the end of the week and they've continued to drop and getting worse so as bonds kind of do their thing. So we'll see how this plays out. Hey there, Stefan. Abs is here as well. Telluride checking in. What's going on, Denny? Ari is here as well. Crypto Mowgli. Crypto, is that Surin? Good to see you. Good to have you checking in. What's going on, Martin? So we're going to take a look at all that today. Stocks, look at some silver and gold, maybe. Take a look at, crypto, of course, Bitcoin. I think we'll even pull up the total market cap today and kind of take a look at that. So I'm watching on that at the moment. But the one thing I just want to make clear, guys, and I've continued to do this to Discord, they're probably really frustrated with hearing me continue to say it, but I think it's important, during, over there in crypto Twitter, everybody's hanging all emotionally on Saylor, right? Oh, look, Saylor bought another $1 billion worth of Bitcoin. And so, yeah, he did. And that was around the 52,000. I think he said they reported an average price they paid of around 52,000 and some change. We're obviously way below that today. But importantly, not only did they buy $1 billion on this decline, $1 billion worth of Bitcoin, but Square bought 170 million on the dip as of a few days back, and price continues to decline. So, everybody's harping on all this. Oh, look, we've got all this buying, Saylor and everybody's buying, so it's got to go up. But this kind of selling that's going on is not retail. The retail doesn't have the strength to sell like this. And so there's somebody bigger out there selling, and that's just as important, guys, as somebody big buying. Because then we find out, okay, who's got deeper pockets and or who is more willing to stick, to stick to their guns here. And I think, that's the one thing that most of crypto Twitter is kind of missing out on when they're hanging on everybody's, coattails and whatnot, excited about these big names, putting little lasers on their eyes and all this other stuff. Which, by the way, you'll notice was pretty much near the top. When everybody started doing that, we got this, we started getting this decline from 58,000. So again, when you're looking for sentiment indicators, that's a great one right there. It showed that the market, that retail was becoming really just kind of ridiculous as far as, the FOMO and the bullishness well out of hand there. And, we get that pullback. I still think this may be a 4, that we've still got a 5 to go. But, we'll have to let price action continue to tell us, to show us the way. But I don't necessarily think this has to definitively be the top at the moment here. So we'll kind of take a look at that. If you haven't joined us, guys, you can join us at howtotradetowin.com. We'd love to have you there. It says 30-plus hours of educational video content and growing. We've actually got probably over 60 hours now. Multi-market setups, for Tier 3 members. We've got about 20 assets we do daily and intraday. We also now have, like it says there, twice weekly crypto index updates. And we didn't get it twice weekly this week because we had that 4 days where we didn't have any power there. By the way, guys, if you haven't been paying attention to it, this news, what happened here in Texas, was pretty significant. According to ERCOT, which is the energy board here in Texas, we were like literally 4 minutes and 37 seconds away from a statewide blackout, which would have lasted a few weeks, at least, is what they're saying. So, I mean, we were pretty close to just y'all not seeing me for a few weeks here. What a crazy, crazy time. So, Anyway, thankfully the weather's back just fine, and and we're all good here, just kind of trying to get everything caught back up. So this week, unfortunately, there wasn't 2 updates to that, but starting next week, we'll be back to getting it up there in 2 weeks. We just started that. But those crypto indexes, man, they include the alt perp, the DeFi perp, the exchange perp, the mid perp, and the shit perp indexes there from FTX. Is that what they're called? Right there. And the idea with that is that it helps you understand how that area is doing. So, should you buy BNB? Well, if the exchange perp index looks like it's getting ready to start launching higher, yeah, maybe you buy BNB or, FTX's coin or something like that, KuCoin. But, if it looks topped out, that's probably a good signal that you should probably be selling. Maybe moving into one of the other indexed areas there. So we're doing that. But anyway, like I said, man, join us here at howtotradetowin.com. We'd absolutely love to have you join us. We finally got automation with our Discord access. So when you sign up, when you go to the checkout page, there's a box there that says your Discord name. Go make you a Discord name, put it in there with the # and the 4-digit number that's at the end of it. And that way your account will be synced up with your Discord access. Now, if you're in Discord and you lose access at some point for some reason, somehow you leave the server or get kicked from the server or something accidentally, all you have to do is log back into your account and just make sure that your name is set up in there. And then it may take up to an hour for the software, then the server and everything to cycle and get you there, but you will be back in. So if you're not, after an hour or so, definitely get a hold of us, myself or Adam, and we'll get you guys hooked up pretty quick there. Let's see here. Who's here already? Let me see who else is here. Let's see here. We've got Godspeed. Good to see you. Ask about AMC here in a bit. We'll go ahead and take a look at that if you'd like. Nevlusian, what's going on, man? Marcel is here. Dominicus is here. Data's here. Let's see here. Let me see here. Daddy OJ, what's going on, man? He says, what you're seeing is institutions starting to adopt. The selling was a lot of retail and liquidations. Not so much. Potentially, there is retail. I mean, there's going to be retail in there. But the fact that it's continuing to sell off, in spite of all this coming in, that amount of selling is not usually indicative of retail. That significance, that, again, it's the idea that supposedly Saylor, at MicroStrategy there, right around this area is where they averaged in at. So this here was likely mostly Saylor. And then it continues down. And so, somewhere in here, 170 million was bought up by Square, and we continue to fall off. But we'll talk about that in a minute here. It's not entirely negative or anything. We'll talk about some of the good things I'm seeing off that. But just be aware that when you've got, $1 billion+ coming in and prices still going down, you need to pay attention. It's as simple as that. If you stick your head in the sand and pretend that it's not really happening, you're going to get what you're playing for, what you're playing there. So just be careful with that. Let me see here. Let me see here. Daddy OJ says you're going to be surprised to see 40K lose. Yeah, if it does, again, that opens up the track for much further down. And so we're going to take a look at this today in terms of Wyckoff as well. We've been expecting a movement back toward this this range down here, the top of the range, to kind of check, if this is bullish, to kind of get that pullback to here to this previous resistance before heading back up. We were looking for it here. It continued up instead, but here it is coming down, so we may, see that as it plays out there. But again, if we're losing kind of this 41 to 42,000 area, I think that really starts saying, okay, we might have much more significant decline potentially coming in. And it still doesn't mean that it's, going down to 3,000 or anything like that. I mean, that's always possible, but it does mean that we would have, something more significant playing in there. So, Godspeed says both of his brothers are in Texas. One lost power for a bit, fortunately. Glad we're good. Yeah, man, we're good here, thankfully. And thankfully it was toward the end of that whole thing and not at the beginning when it was really bad in terms of the cold and everything. So, it sucks. It sucks. But, you deal with it, you do it, you go on. That's where it is. A lot of small towns were out of gasoline because their generators, people, living out in the country, got their generators and everything. They were coming into town, taking all that fuel to keep their generators going because they didn't have any power. Yeesh. Good times, good times. Tell you right here, let's see, what'd you say? You read this AM that the Texas governor requested permission to fire up coal plants temporarily ahead of the storm and was denied by the DOE. I haven't seen that yet, but I wouldn't be surprised. The biggest issue we had was just the degree of cold, guys. In Texas here, we're not supposed to get that kind of cold. It's, that's been the coldest it's been in 30 plus years. And then on top of that, the air was moist. There was moisture in the air, more so than, just a dry cold. And so because we don't normally get those levels of cold, the levels of insulation that you would find further north, we don't have, or we haven't had until now. I bet you they probably do it now, though. So, the biggest culprit was that the pipes that the natural gas was flowing through froze up. But, it was also the turbines, the wind turbines. But the wind turbines aren't, a significant source. It's like 20%, I think, of the energy we get to the grid here. But at one point during the whole thing, I guess, almost 49.6% of the power generation was offline, which is why it got so bad due to that. So I think what they'll do is they'll just they'll get more insulation in these pipes now or whatnot, just so they don't, because the people here are going to demand it. I mean, it doesn't, from a cost perspective, it doesn't make a lot of sense for something that happens once every 40 years or something. But, again, the people, us here in Texas, are going to say, you need to get that done. Because I don't want that happening again. That sucked. Let me see here. What's going on, Brian? Good to see you. Hank, shut your mouth about regulation. LXT, what's going on, man? Let's see here. Who else is here? Anybody else helping? Let me see. Hey, Baker, what's going on, man? All right, so anyway, if we're looking here at Bitcoin right now, what's going on? Well, we've got this bit of distribution that happened up here. It led us down into this area we're kind of now in here, this local, I'm still thinking this may be a reaccumulation type area. That doesn't mean it can't come down any lower. If I was to look at this as such, I'm looking, this is phase A, stopping phase here. This is phase B. I don't think this is phase C here. I think this is just phase B dipping down a bit. So we'll see if we get a lower high here, prior to this 52,100 area here, get a lower high. And if we get that, then we'd expect a spring to come in, and that would be wave C or phase C. And you get to move up if this is reaccumulation here. Again, I talked, here's the good thing. When you compare price action and volume, you want to do it at the correct area. So, you can't just, compare this to this or whatever. You want to look, okay, so you've got this dip here. So here's your candle. Here's your volume, large, large candle, large lower wick, which is the buying. But nonetheless, a ton of supply coming in, right? It comes down, it drops again, and the second time, much less volume. So less supply coming in a second. This is what you want to see. As it dips, anytime it dips, you want to see that volume dropping off, because that tells you less and less interest in selling. So we get over here now, here in this range here, and you've got the initial drop here. So basically your selling climax area would be here. And you've got your volume there. And then you come down here with the dip below, and it dips below on lower volume. So this is what you want to see if you want to be bullish. Now, this is still phase B. You've still got a lot of up and down going on here. So we'll see how it continues to play out. But right now, at the moment, I'm not expecting it to head up and out. I don't think this is the bottom here. It could be. I don't think it is. If it is, what you're going to have here is an A and a B. And then you've got to get, you've got to somehow get, 5 down, A, B, and then 5 down out of this. And this is where it becomes a problem. If we zoom in, I've shown you guys this count before. I think I did it on, on Tuesday. But I've gone in here and, you know, counted all these waves down here. And, you know, of course, the counting could always be off when you're zooming into 5-minute, you know, and 10-minute time frames. There's always the, you know, a stronger chance that your counts may be off. But to me, it looks like we've got 5 waves down here, which would be an A or a 1. And then this would be your B or your 2. And then again, counting these down here, it seems to give us, you know, a 1, 2, 3, 4, 5 here. As what would be, you know, potentially just a 1 of, you know, maybe C. So what you get here is an A, B, and then a 1, 2. And this could be a 3, and then you get your 4, and then you get your 5 here as an ending diagonal for C. Let's see here. 1, 2, 3, 4, 5. So there's no leading diagonal here. So that means we could have an ending diagonal happening here. And again, that would just be a 1, 2, 3, 4, 5 coming down here. And so that 5 then would be that spring I was talking about. So it'd be, you know, again, you have basically phase A there, you know, and then you've got phase B working through there. Then you'll have that dip down there, you know, for phase C. Then you'll have your interior markup, phase E, you know, right in here. And then you'll have your, you know, your exterior markup here, which would be phase E there. So again, you got your stopping, building a cause, your shakeout, your spring here, and then you got interior markup and exterior markup. And that's kind of the way I'm kind of leaning toward what's going on here at the moment. So in terms of this, if we zoom back out here again real quick, you can see there's this kind of descending wedge thing going on here. And, you know, that would make sense for a wave 4. You know, wedge is a wave 4 here. Wedges are corrective. They're not reversal. So, again, wave 4 would be corrective. Wave 4 isn't a reversal. It's a correction of, you know, the waves coming up. So this to me would make a lot of sense. The question is, in doing so, how deep does it go? And I could potentially see it coming down here to this 42,000 or even, what is this right here? 41,300 to 42,000 area. Again, this is that larger trading range, guys. This is this trading range right here. So coming back down and retesting that before heading up, you know, would make sense there. Locally here, you do have a bit of a bullish divergence here on the 4-hour. So you got slightly lower lows here, slightly higher lows on your oscillator. Stochc RSI barely dipped into oversold. So it kind of suggests that there's still room for it to fall down. So now you need to see, does it get above, you know, this swing high up here, this 50,121. If it does, I think that opens up the case for that move, you know, for potentially this to be done. But again, it's just how do you count this then off of this? Because it seems like we've just got a 1 here, a 1 or an A. Now, the other possibility here is that this is a 1, 2, 3, 4, and you're working on 5 here. And that would just give you a leading diagonal for wave A. And then you get 1, 2, 3 up, and then 5 more down. And in that case, you'd see price, you know, probably getting down here to around this 35, 36,000 area. Mid-range here of this previous trading range. So again, the idea here would be that you get a 1, 2, 3, 4, and then maybe like an ending diagonal of this diagonal to get you a 5. And then you do an ABC up, which would be targeted right around this this previous high here, right around that 52,000. And then you'd go with your, you know, your 1, 2, 3, 4. You know, just getting you right here at least around 35,000, maybe even closer to 32,000 as it continues to play out there. Let me see here. If we actually measure this out, if we get an A down here, B back up. Well, right there around 35,000 is actually your, your 100%. So wave C would equal wave A at that point right there around that mid-range. And to me, all that would signal is that we're probably then going to have the fifth wave coming up here. This, by the way, if you get to this area, this still keeps this as a red 1 with your flat here as a 2 and a 3. It just gets you a deep 4 on that pullback, but you still have that 5 coming up there. So that's the other thing as we watch here as this develops, which way is price going to go. If it gets rejected and heads on down with that area there, then again, you've got a potential of an ABC here or a leading diagonal of an A. Then you get a B, and then you have a C coming down. There's no way to know right now which one it's going to be. You just have to pay attention to it. Again, moving back out here to the daily, we had volume continue to expand up through here. And then price couldn't do anything much. It got rejected right here at this February 18th range right here. That's where it got rejected here on the 24th and 25th. And then we've dropped down, and we were finding support, and we still are right now. If you look at where the open of this candle, today's candle is, it's right here at this previous resistance support area here. But it is showing that there's pressure coming down. You've got wicks still pushing down deeper into it. If this holds, that's a good sign. If we lose that, then it opens up, again, toward this 41, 42,000 area, and then potentially even as you get down here toward 35,000, which, as you can see, would have you right above that daily pivot. But as far as pivots go, we only have a couple of days left in this month till these daily pivots change at the end of the month. So they're not as strong right now as they were prior because you've had price action happen since then. So just some things to look at. If you want to be bullish, the fact that we don't have a significant amount of volume still coming in as price is coming down here is a good sign. But you don't want to see price continuing to drift down on low volume because that tells you there's just no demand. And that's not what you want to see. You want to see some demand picking up and some volume following through on a push up. Until you see that, be concerned about further downside. Hey there, Esteban, Oscar, good to see you guys. Let me see here. Spiral Architect, what's going on, man? Let's see here. WXY, definitely possible. Anytime you've got an ABC on a larger time frame, obviously a WXY is a possible. That would just mean 3 down. But again, when you zoom in here, my big thing for me personally is when I've zoomed into this, I actually did this on the 5-minute to get this count, which works out, here on the 15-minute there. But, this gets you a pretty significant count down here to an A or a 1 here. And the thing is, if this is an A or a 1, it limits the possibilities of what are going on here for any short-term, completion to this and a reversal and heading back up. Because this is such a move down as it was, and then you have this following, which really doesn't do a whole lot of help there with that kind of trying to find a definitive bottom real quick and close here. Because here's the thing, even, if this is an A and a B, again, you're still got C going here. And I think the best thing you hope for is this is a 1 and a 2, and this is maybe a 3 and a 4, and you get a 5 as an ending diagonal here for C. I think if you're bullish, I think that's the best hope you have. I don't think this is a bottom here. Again, trying to figure out this count. The only way this becomes some sort of bottom is if this is a 1, 2, 3, 4, and a 5 here, and this is done as far as wave A goes. In that case, you get a wave B up, but even then, you still shouldn't likely be going higher than this 50, this high volume node here around 52,000. So even if this is a 1, 2, 3, 4, and a 5 right here, you should get an ABC up at most around that area there. That would be B, and then you've got C, which will take you down here probably, 38 or 35 in that case. So, that's why we're just going to watch those levels. Does it get above right here? Does it get above the descending resistance? That's my first look. If it does it get above this this supply structure right here, right at this high volume node, right around that 52,000 area? If it gets above that, then my next goal, if I'm bullish, is it needs to get above this over here, this 55,043. And that, I think that's how you look at it. Descending resistance, this 52,000 area here, and then this 55,000 area here. Those are your targets on the way up. But if it does get rejected here, that gives you this lower low, lower high here, which should lead to at least a lower low here in terms of this structure. So that lower low maybe just gets a little bit lower here. Maybe dips down all the way here to the 42,000, 41.3 to 42,000 area. And then heads back up. That's definitely, again, definitely a possibility. That's why I have this here. But, if you're going to follow this as a 1-2, and then, the normal wave 3 that we look for, the problem with that, if you're bullish, is that all of a sudden, excuse me, let me see here. All of a sudden, that means if we make it up the 61.8 right here, right below the S1 pivot, then your wave 3 is down here around 36, and your wave 5 is down here around 33, 32.9. Just with our normal extensions. But again, I don't think that would be, I think this, if this is an A, B, and an A, B, and a C here, then I think that this, ends up being a 1, 2, 3, 4, and a 5 here, rather than, what I have here is a 1, 2, 1, 2. So, the thing is, if you're looking at Elliott Wave and just price action like that, all the overlap gives you more possibilities. So you just look at, okay, well, what are the important levels? And that's what I've been talking about. That's why, these 3 levels on the upside, those are what you need to overcome. If you want to be really bullish, looking toward potentially 60,375 off the swing low here. If this is the low somehow, some way, if this is the low here, then wave 5 has a minimum target up here around this 60,375, 60,400 kind of area. Now, it doesn't mean it can't overextend, but they get at least that, or it just becomes wave 1 of 5, in which case your upside is going to be a lot higher, potentially up to 106,000. So how would you know that? If it was to reverse off here and head up here. By the way, this pattern target is based on the height of the wedge here, and that comes around where we're already looking to get here. But if it makes it up to this area and then pulls back below this swing low here, then that would tell you that if this is 5, it's done. But until we break out of this, above this swing high up here, there's a lot of extra possibilities in terms of even a triangle forming or a flat forming here. This is the range, guys. I mean, like it or not, and for many of y'all, you don't, because you're like, man, well, I'm nervous to trade inside here because I don't want to get stopped out, a lot of chop. But man, that means I have to wait till it gets above, 58,400 up here before I can really start feeling like maybe it's bullish. And that's too much. I don't want to miss all that move. So, I understand that, but the reality is that's your range top up there from this area. So, again, if you want to trade in the direction of that, toward that level up there, then I think your best case is you watch these 3 levels as price is moving. You can go long on a breakout of this line, for instance, with the intention of at least getting to this area, this 52,000, and holding. If it breaks above it, then you're looking for this, 55,000 area here. If it breaks above that, then you're looking at the all-time high up here at 58,367. If it breaks above that, then you're looking at whatever your 5th wave target would be. But just trying to buy right now and just thinking it's going to go right up from here and just holding and closing your eyes to anything that's happening, I think is a lot more harmful, because the reality is where we're sitting here, there's nothing that says this is the bottom or that even this will be the bottom right here. Price could definitely head much lower. Because at the end of the day, guys, guess what? This could be 1, 2, 1, 2 of A, which means A is going to head on all the way down to 20,000 or 16,000 or something. That's just wave A. There's absolutely nothing going on here that says that's not in play. So don't just buy, blindly and think it's got to go up just because you need it to go up. you can buy, that's fine. Watch these levels I've talked about. And if you're getting above them, then that's increasing confidence that you're in the right side of the trade. But keep them in mind as it's moving there. Rather than just saying, oh, I'm buying here, thinking it's going up to 100,000 from here right now. Because then again, it's going to pull back. And you can say you've got all the steel or diamond or whatever the stupid term is for hands these days. But I'll tell you what, if you're buying here, especially if you're buying heavily, and this thing drops to 35 and then 30 and then 25, you're gonna deal with a lot of emotional stress. And most people, regardless of what they say up here, will sell at some point there at a loss. Because that mental stress, that emotional stress is very difficult to deal with. It's very uncomfortable. So just kind of got to be realistic there, guys. Let me see here. Mac the Man says they think 90,000 before another pullback. Well, we have to finish with this pullback first. Because again, as I just said, this, it's still nothing here ruling out that it can't go to 20,000 or 15,000 or 10,000 or anything like that right now. Because again, with what's going on here, this could just be a 1-2, 1-2 here. 1-2. Of A. So a lot further downside still to go. And, the thing about that is most of y'all, or maybe not y'all, but retail traders in general will continue to buy the dip thinking, because everybody online is going to keep telling them. Think about it, guys. All your big accounts out there, they told you to buy the dip here, and then they beat their chest like they were so smart as it went up here. And then it went down, and they're like, oh, that's fine. It's going to go back up. Go ahead and buy the dip again. And went up, they're beating their chest again, and then there it goes down again. And so they keep telling you to buy these dips, but what if buying these dips is nothing more than, buying it as it continues to drop down, 20,000, 15,000, maybe lower even. How comfortable are you doing that? Right now, if you're buying the dips, you're buying the dip because you think that's the final dip and it's going up higher. And if you've been buying them since this move up here, of course they were saying it up here first, and then here, and then here, and then here. But, if you bought it in this area here and it went up and it went back down, you got scared and then it went back up. You're like, oh, that's good. Thank God. And then it went down to a new low again. And you're like, what the heck, man? So it gets really difficult to kind of deal with emotionally. So you guys, that's why we talk about all this and let you know where these levels are, because otherwise, you don't know what's going on. And if you don't know what's going on, it makes the market really scary. And that's what forces you to sell when you shouldn't be selling, or buy when you shouldn't be buying. Because you're scared of missing out. You're either scared of missing out on profits running up, or you're scared of missing out, limiting your losses on the way down. Either way, it's not a good situation to be in. You don't ever want to trade emotionally. You don't want to ever put in a trade because you're scared. Because that means you don't really understand what's going on with the market, which means you're much more likely to lose money in the grand scheme of things than you are to make it, unfortunately. Let me see here. Yeah, and I, for me personally, guys, I don't like to really trade the smaller time frames. It's just a lot of maintenance, I would look at the 1 or 4 hour here, and for me personally, my buys would potentially come on a break above this descending resistance, or a break above this 52 area, or a break above this 55 area here. Those would be my indications, more likely than not, to buy. Anything that's going on here, guys, all this for most traders here, all this overlap is just it's noise. It's just going to end up hurting you more than anything else. Interesting. I just saw this, so maybe there's a little something here. We could potentially have, looks like maybe a bit of a head and shoulders going on here. Let me see here. Maybe. The volume profile kicks up as the shoulder completes and presses through, which is good. So what that means is if this is correct, your neckline is this right here. And that means your target then would be the height of this here. So if you're interested in patterns, this may be of something of interest to you here. And look where that takes you. It basically takes you to this line. So a pattern target would basically take you up here to around the 50,533 area, which is just a 78.6 retracement of this decline. That's a solid wave 2. I've got the wave 2 minimum here at 61.8, but, that could be up there at 78.6. And that might take price to peak right above this line here and drop back in. And if it does that, it's going to trap people who are trying to buy that breakout. Your horizontals are always the better buy or sell level than your diagonals, because your diagonals may or may not be where you need to be watching at that time. But that's only if this is a head and shoulders here, an inverse head and shoulders. I'm not sure it is. If it is, and this is pulling back here, you don't want to see it drop below that line. If it drops back below that neckline, no, not a head and shoulders. Don't worry about that target. This might be the top right here. A, B, C. Coming up there. I mean, we've already hit the 50%. Decent wave 2. 50% at least. Usually we look for 61.8, but a 50% is all right. So that's what I'd be looking for on that as it continues to play out there. Let me see you guys. What's going on, Block Tech? Good to see you. Hey there, is that Kenley? What's going on, man? Yeah, I teach this and a heck of a lot more. Yeah, you can ask. You can freely ask in the chat there. We've got a lot of members that are logged in today to this live stream, and they'll tell you what they think. But not only, if you do tier 3, not only do you get all the educational videos we've already put out, but you get a weekly tier 3 live stream where we go in depth on different things, tips, tricks, and techniques and whatnot. That I spend an hour, with the members kind of going in depth and saying, okay, this is how you would use this. Here's a technique you can use where you don't even have to know what you're doing in the market. It tells you where you need to enter. It tells you where you need to exit. It tells you where you need to put your stop loss. So that way, even people who are brand new have a way to play the markets if they absolutely cannot help themselves. Honestly, guys, if you're new to the market, I would suggest you get some kind of education under you first before you jump in. It's like, you're not going to go driving down the road at 200 miles an hour in a sports car if you don't know how to drive, if you don't understand, if it's a manual, if you don't know how to use the manual, if you don't know how to use the clutch, if you don't know how to, use the brakes effectively, you're not going to do that. And if you are, we just say, oh man, you're a freaking idiot, right? Same thing at the market, guys. If you jump in without knowing what you're doing, you're most likely going to lose your money. I mean, it makes no sense that you think that you would come in and be able to make money. I mean, we think that. We do. I was there. Long time ago, a quarter of a century ago now. So I know, we think that, but if you stop and think logically about how much sense does that really make? You're going to come into something, doing something you've never done before, you have no clue about it, and you think you're going to be successful at it right away. But so what we do, again, is I realize that people don't want to listen to that and they're impatient. So I put together this weekly stream that we do for tier 3 where, again, we show you different techniques to trade, that all you have to understand is that technique. That's all you have to understand, because it tells you at this point you put the stop loss, at this point you put the profit, the take profit, at this point you put your entry. So it kind of gives you all the rules in there to do it. But it's no substitution for getting there, really learning how the market works, which is, how the indicators work and how to figure out who you are as a trader. Your risk management, how to do that properly, and that's all covered in the other course stuff that we have. So yeah. Let me see here. Darren, always good to see you checking in, man. Oh no, I'm not bullish. No, I mean, again, guys. Listen, guys. Here's the one thing. Unfortunately, I had to block somebody on Twitter today, and I don't do it very often. But my time is very, very full. And I will try to help people understand if they don't understand at first, things that I talk about. But if I go through all that effort to help you guys try to understand, and you come back with the same stupid nonsense again and again and again because you refuse to listen and you just want to appear to be right, I will block you. There's no time to it. It's not that I hate you as a person or anything, but I just don't have time with the silliness. But I had to do that with somebody today, because they couldn't get the idea through their head that I'm talking, when I'm talking about right now, this big macro thing we're looking at that I've been talking about for a while now. it takes time to play out. And so, it's not going to happen overnight. But most of retail thinks, oh, if something you say doesn't happen immediately or the first month or two or 6 months or whatever, then it's not going to happen. Well, no, if you're talking about a 90-year cycle, it's going to take time for it to finish playing out. The idea is to pay attention, to be aware of what may be going on. And just because you have a large macro outlook does not mean that you can't make money still trading that ridiculousness that's going on. I have a member who recently sent me a PDF or an Excel sheet, of the trades that I've put in since they've been a member here. I guess it's probably been a little bit less than a year or something. I haven't had a chance to really look at it yet, but they said it was something like 400 trades that I put out just for stocks, or maybe it was everything all together. I don't know. But anyway, a lot of trade opportunities. And, we've been pretty successful. So even though my wider macro view is that there's something really looming here that may be on the precipice of beginning right now, some really much scarier depression-esque type thing. Again, we're talking about this large 90-year cycle, which started back during, at the top of the 20s there, right before the Great Depression, or right at the lows of the Great Depression there. And so, in spite of that, we've still put out ridiculous numbers of very profitable trades, as prices continue to move up. So again, one of the things to do when you're a new trader, retail new trader coming in, is to divorce yourself locally from the larger picture. It's hard often when you're just coming in to hear these things about this bigger picture because you're thinking it has to happen right away. And so it's hard to wrap your head around hearing that and still being able to trade long on things. So it's just, it just is what it is. I have no problem, if somebody asks me questions and trying to help them understand. But if they refuse to listen and they just want to cause issues and they just want to be silly, again, guys, if you fall into that, I'm just going to block you because I just don't have the time to deal with it. So, but other than that, I do my best to help people really understand, because a lot of what I talk about, most people don't understand. And thank God I don't go to the depths of it as Travis Kimmel there. Travis is amazing, man. I tell you what, I choose not to go so deep just because it means I would have to spend a lot more time explaining stuff, and I just don't have that time because of what I do at TWC. But man, if you guys want something like that, it's Colorado Travis on Twitter. Make sure you're following him, man. Absolutely fantastic stuff. He's been doing a lot of work looking at volatility here lately. And he's got a lot of great ideas with that. But other people, Steven, I think it's Steven Van Meter, Santiago Fun, people like that, talking about more difficult things that retail traders generally don't understand. Again, everybody talks about this idea that QE is inflationary. Oh, the money printer's going, blah, blah, blah. But that's just a complete lack of understanding of what's really happening. Where is the money going? How is it getting there? And what's going on once it's there? These are the things that make more, that are more important to understand, but most people don't. Most people don't understand that the real dollar creation that you guys are looking for in terms of overall inflation, not just asset inflation, which is what QE does. It inflates assets to make the stock market look like it's doing better, to help keep companies pushing on, to help keep people thinking that things are going better and out there spending. Remember, guys, at the end of the day, this is the thing you guys absolutely have to understand, whether you're trading crypto or Forex or commodities or equities or anything else. You need to understand that pretty much every government these days are debt-based governments, okay? That means that they rely on credit expansion. If credit is not expanding, if credit just stays even, or worse yet, drops, credit contraction, this is very detrimental. It's very bad for an economy that's based on debt, because that debt becomes more and more expensive to pay for. And your prices are dropping, you're getting deflation, your debt's becoming more expensive to pay for, and this causes a lot more companies to go out of business, people to lose jobs, which exasperates everything else until an equilibrium is hit. You have to understand that. Because if you understand that, then you understand that real inflation, the type that you guys continue to talk about when you talk about the money printer, is the stuff that happens at the bank level. The money that the bank puts out, the loans that you take out or a business takes out. That's money creation right there. That's where the money creation is. That's where the credit expansion comes in. But by that same token, even if you understand that, most people don't even understand that when you pay off debt, you're destroying dollars. So when you take on new debt, when you take out a loan, new dollars are being created and given to you. When you pay that loan back, those dollars are being destroyed. Credit contraction. You absolutely have to understand this, guys, no matter what you're trading. That's the basis of what's going on around the world. I mean, that's as simple as I can put it. Now, the Fed's going to try. The Fed's determined that they're not going to go below zero. They're not going to do ZERP interest, zero or lower interest there. They said that they're going to try and handle things via the yield curve. I don't have time to go into it. The yield curve is another very deep subject. But depending on your front end and your back end of that curve and how that plays out, the theory is that you can manipulate what's going on finance-wise with that. At the end of the day, guys, what the Fed is trying to do is to get you and me and everybody else to act in a way that they need you to act. And right now, they need you to take out credit. They need you to spend money, not paying back debt. If you're paying back debt, you're doing the opposite of what they need you to do. If you're not taking out loans, you're not doing your part. You're not being a good citizen. Doesn't matter what taking out that extra loan does to you personally or what kind of situation it puts you in. You're not being a good citizen if you're not doing it, right? The Fed, the best the Fed can do, I've said this so many times before, is they've got a mouth. And they need to get you to do things with their mouth. They need to say things that encourage you to do or not do something. As long as you don't listen to them, as long as you and everybody else, the majority of people out there aren't listening or refuse to do what they need you to do, guess what? They're not going to get anything done that they want to get done. So this idea that the Fed can save the markets is a bunch of nonsense, other than the idea that they might get you to do the things that they need you to do. But they can't just go out there and do this or that, and all of a sudden the market's just fine. And I think that's one of the hardest things that people have trouble understanding if they don't have a deep, macroeconomic background or global finance or something like that. Let me see here. Well, I appreciate that, Dominicus. I appreciate that. Yeah, it's just about, again, when it comes to these ideas that I talk about, these big macro ideas, what the Fed does, they don't know if it's going to work. Again, like I said, they had this failed policy under Greenspan that, that was based on this idea that, as long as your unemployment was low, that interest rates would, the lower that your unemployment went, the higher your interest rates would have to go. That got totally blown out of the water here, right? Before the pandemic, we had 4% or 3.7% unemployment, which was historically low, and we had interest rates at almost 0%. So, again, a lot of this stuff, even the Fed doesn't know if it's going to work. I don't know if what I'm saying is going to turn out the way it is, but based on things that have happened in the past, it makes more sense than a lot of the nonsense that we hear out there. So that's what we work with. Let me see here. Daddy-O, what's going on, man? He says the biggest thing that's changed is that stimulus is going directly to people's pockets. Is going straight to people's pockets and not Wall Street. What stimulus is going to people's pockets? They took their stimulus money last time and they put it in asset inflation. They put, they bought stocks or whatever, and they paid down debt. Neither one of those things helps the situation. Neither one of those spending of putting it into buying stocks or crypto or something or paying down debt, neither one of those helps the situation that the country's in terms of this credit bubble. Neither one of them touches it. So that idea I don't think really holds a lot of water right there. This idea that the stimulus is different because it's going to them. It's not really doing much of anything in terms of that. Daddy-O says that all this money creation will create inflation. What money creation? Again, I don't think you understand what's going on with QE. Like most, people out there, you think that the Fed's, you look at that M2 money sheet and you go, oh, okay, look at all this money that's being printed out there. But that isn't what it is. Most of that sits in the Fed Reserve untouched. Because, it's used as reserves for the banks to reference so that they can create loans. Again, remember, I told you, what you're talking about happens at the banking level. When we go in there and we take out loans, or business takes out loans. That's where the money creation that matters happens. You can print all the dollars in the world you want. If you stick it in a vault that legally cannot be touched, that's what's going on. There's nothing you can do about that. It doesn't affect, it doesn't create inflation, across the board. Now, again, you're going to have asset inflation because of the way in which the Fed's trying to end around, and prop up they're trying to prop up the markets. But as soon as people decide, no, that isn't, as soon as that gets stretched too thin, there's nothing that the Fed can do about that. The market comes crashing down. Everybody gets out. But make sure that you guys understand that this money printer goes burr kind of inflationary idea that you guys seem to have in your head, make sure you understand that that is not the same thing as asset inflation, which is what happened with the prices of stocks. Two completely different things on that. Okay? Because of the way in which QE works and the way in which the money is injected. It's a balance sheet transfer, guys. That's all it really is. Contrary to what you may want to believe. Let me see here. We also have a fractional reserve lending system. Yeah, that's how the banks that's how the banks are actually the creators of dollars. Not the Fed Reserve. It's your banks. They create the dollars that lead to the inflation you're thinking about. But in order to do that, people have to take out loans. If people aren't taking out loans, that credit expansion is not happening. As long as people are instead paying back loans, deflation is happening. You're getting rid of the dollars. You're not creating them. You're getting rid of them. They're going back into the bank. They're not moving around. Let me see here. But that's why what I talk about here is the idea that this cycle we're in is the top of this credit bubble. That's where this is all leading. This is what I'm trying to get to with trying to explain this. It's not the printing of the dollars by the Fed, because that doesn't really, in general, find its way out into the populace, guys. It goes to your primary dealers, which then just gets rolled back into treasuries and whatnot. For all intents and purposes, it's a balance sheet movement. The money doesn't come to us and then go spread out through the economy. That's the problem. So it's not really stimulus in that way. It's to give the look that the markets are doing well, so that you think they're doing well, so that you don't get fired, so your companies think they're doing well, so that that you don't get fired and you continue to spend money. As long as you're worried about losing your job, or people are losing their jobs, or and people aren't spending money because they're scared about things, whatever. Yeah, that's exactly the opposite of what the Fed needs. Let me see here. Christopher Arsky, hey, I appreciate that, man. You're 34, mainly retirement savings to manage. I've been doing so for a couple of years. So more than just Bitcoin to consider. I think Bitcoin could fall back below 30, so I'm nervous. Yeah, it's definitely a real possibility. And this idea, I think, again, trying to figure out, one thing I've been trying to work on is how do we, everybody thinks, I say everybody, people without much of a macroeconomics background. So retail, and it doesn't matter if you're retail and you've got a lot of money, you're still retail, right? But they have this idea that Bitcoin's going to go up even if the economy tumbles, even if the economy goes down. But that doesn't make a lot of sense. If the economy takes off like it is now, starts dropping, this creates what we call a risk-off environment. And so in a risk-off environment, money managers, people, whatever, they move their money out of risk-on assets, stocks, crypto, whatever. They move it out of that and they put it into, TLT or some other kind of treasury where they can protect their money. Or maybe they'll pop some into the dollar because the dollar's moving up at the moment. So how do you convince people to buy Bitcoin when the value of Bitcoin's dropping and the value of the dollar is rising? How do you convince somebody to trade $1 for a Bitcoin? I think if Bitcoin's dropping and the dollar is rising, you're an idiot if you're buying Bitcoin. I seriously think so. Why would you trade an appreciating asset for a depreciating one? It makes no dang sense at all, right? The goal, you're buying Bitcoin because you want to make money. Everybody says, oh, I believe in the tech. Well, shut up. You're lying. Y'all are buying it because you hope somebody else is going to buy it at a higher price. So the price raises so you can have money, right? If you weren't, then people wouldn't be so upset about buying here or buying in 2017 the top there, even though it dropped back down to 3,100. Why would people have been upset by that if they weren't concerned about the price? People want the price to go up. They want to make money on it. It's denominated in dollars. If the value of your dollar is increasing, guess what, guys? Anything valued against that dollar is going to necessarily decrease. Only an idiot would trade a appreciating asset for a depreciating asset if they're looking to make money. It really makes no sense otherwise, right? But I don't think, most of the people that are in Bitcoin right now really are understanding this. Let's see here. Let's see here. By the way, Daddy OJ, you seem to be very, very passionate about this idea that your inflationary idea is correct. In difference to what's actually happened, right? First of all, this stimulus that you're talking about going to people is very small in the grand scheme of things. It's very small. It's not enough to move the needle. But if you need a better example, understand that we've been in QE since 2010. The government has printed all this money since 2010. And yet, from 2010 to 2020, inflation was barely above 1% on average. It rarely even just barely peaked near 2%. Matter of fact, we were in deflation for a bit in 2015 or 16. So if your idea that all this QE is causing inflation is correct, then explain that. How the heck was it not inflationary by the government's measure there through the last 10 years? They're doing the same thing now that they did then. It's not going to change. The result isn't going to change. If QE is inflationary, it should have been inflation. We should have been running hot for the last 10 years. But this Fed was struggling to even see inflation even hit 1% over the last 10 years. So QE must not be inflationary. Everything else aside, not understanding the rest of it is fine, but looking at that right there, how else are you going to argue that? Let's see here. They aren't paying debt back? Oh, yeah, they are. Sure they are. I've shown you the charts here during last year. Matter of fact, in May of last year, the U.S. savings rate was just over 30%, the highest it's ever been. People were saving money. They weren't spending it. That was the first problem. Then we looked at the debt throughout the year through the St. Louis Fed, and it showed us that the debt was dropping. It means people were paying it down. So this idea that people aren't paying it down, I don't know where you're getting that from. The Fed itself gave us the numbers. I'll see if I can pull up a chart here real quick while I'm still talking about this. If I can find it here again. But yeah, so we actually saw that. We actually saw them, doing that exact thing that you're saying they weren't doing. Which again doesn't make a whole lot of sense there. How the heck? I just turned off the. Sorry, I got to pull my thing back up here. God dog it. Sorry, my chat window here just shut down on me. I think I just might have lost everybody's... doggone it. I just lost the comments. Anything that I haven't addressed yet, my apologies, guys. I just lost that when the chat window shut down there for whatever reason. So I've got a brand new chat window, as you can see here. But yeah. So, like I said, if I can find that chart here again, I'll pull it up there. But what we know is that banks throughout most of last year were actually making it more difficult for people to get loans. They had raised the standards required. So the idea of QE with the money going into the Fed's reserve for the banks to reference to make new loans was so that the banks would loan more, and the banks were actually loaning less. Not only were the banks loaning less, but less people were coming in to take out loans. So again, it's all that credit contraction. That's happened through there. And again, with the economy, that's what we're doing here. We are a debt-based economy. We need credit expansion. If we don't have that, then the economy rolls over. But asset inflation is not the same thing as what you guys think about when you say, oh, the money printer is going to burn, whatever you think means inflation and the dollar's going to go down and all this other stuff. And I think that's an important thing to kind of to get to understand. I think there. Let me see here. We can catch up with you guys here. Mark, what's going on, Mesa? Savings levels have never been higher. I work in pension and benefits, and it's going up. Yeah. Again, people are... The Fed needs us to spend money. They need the money to circulate. They need us to go out and take new loans out to create more cash to then be spent and circulate throughout the economy. But if we're not taking out those new loans, and even worse yet, if we're paying back and saving, if we're paying back loans that are outstanding and we're saving, then we're doing all the opposite that we need to do for the economy to get better. And there's no two ways about that. It doesn't matter if Biden's plan, the House is expected to pass the stimulus bill here today. It goes to the Senate next week. It'll probably get changed a little bit there. But let's say it goes through and the $1,400 to every person that fits their criteria here in the U.S. goes through. First of all, that $1,400 a person is very tiny in the grand scheme of things. That itself doesn't really do a whole lot. Second of all, if those people take that $1,400 and they pay down debt and they stick it in the bank, then guess what? That has no inflationary effect on what's going on, guys. It doesn't matter that it was given to them. It's what do you do once it's given to you? If you're not out there just spending it, eating out 18 times a week or, whatever, then it doesn't do any good. Let me see here. Watching prices in homes and rent go higher, and they're going to watch energy and food prices next. We can agree to disagree, but the best is Bitcoin will be harder form of money than gold. I think older guys don't understand tech. I think that was a jab at me, right? I'm old. But if you grow up around it, you do. I understand it completely. But what you younger guys don't understand is what's really going on in terms of the world. You think the death of the dollar is here. Guys, people have been singing the dollar swan song for 100 plus years. And every time they get loud like they are right now, it turns around and ramps back up. And the world proves time and time again that the dollar is the only safe haven to be in a downturn. Everybody goes to the dollar. Why does everybody go to the dollar? Because the dollar has two functions, requirements. It may be created out of thin air, but it has a use, guys. It is required to pay your federal taxes. You cannot pay your federal taxes with anything else. So you absolutely have to buy dollars to pay your federal taxes. Number two, you have to pay U.S. debt with U.S. dollars. If you're buying treasuries or something, you have to buy them. Or, if you're making payments on debt to the U.S. here, you have to make those payments in U.S. dollars. There is a function to a U.S. dollar. Bitcoin, guys, listen, I think Bitcoin's great, and I hope to God it works. I don't think you guys are catching that many times because of my reality here. The things I'm trying to get you guys to understand. But the problem is, Bitcoin is not required for anything. And I'm going to tell you what right now, as a business that accepts crypto payments, it is a pain in the rear end, guys. I'm going to tell you right now, as a business, it is an absolute pain in the rear end to accept crypto payments. Bitcoin's the easiest to accept. Anything else, especially if you're trying to accept payments in Ethereum or on that Ethereum blockchain, absolutely stupid. We've got thousands of dollars locked up in income for my company right now that were paid in USDC that we cannot transfer, that we cannot turn into cash because the fees on Ethereum are so high that we don't have enough Ethereum in our account there to transfer that out. It just sits there, guys. Been sitting there for a while. And we can't just transfer Ethereum in to do that either. So it just sits there. I know many of y'all, including me, we want to see the crypto payments become accepted more, by a greater group of people, businesses out there. But until they get this nonsense figured out, it's stupid to accept crypto. I'm going to tell you right now, it's absolutely stupid from a business standpoint to accept it. And you say, oh, but you should just get it and hold it, and then you can get all this, appreciation, whatever. Well, yeah, if it appreciates. What if you're a business? What if you're a smaller mom and pop shop that you need your cash flow coming in? Many businesses, guys, you need the cash flow coming in, even larger ones, because you run on tight margins. You can't afford to just let it sit there and hope it appreciates. That's silly. It's got to be changed to cash so you can pay your bills, you can pay your inventory, all these things. So I'm telling you, this is the hard truth here, guys. This is the hard truth about crypto. It doesn't make anything easier right now for businesses. It does not. Which means, to spread its acceptance as by businesses to accept it, it doesn't make a whole lot of sense unless you're somebody like us who hopes it all works out, and we want it to work out, and we're doing our part by by receiving this. And that doesn't even touch all the extra money you have to pay to deal with the tax side of it. All the special tax things you have to go through to claim that income. So there's a lot more there, guys. Did I burn all my books during the power outage? No. We're moving things around here, so no. We're moving things around. I wouldn't burn books. No way, man. Josh, what's going on, man? He says he definitely paid his debts down. Yeah, a lot of us did. I know I made a lot of payments on debt this past year. Let me see here. Darren says that our tier 3 is the best investment they've made compared to any investment they've made in the previous 5 years. Oh, man, I appreciate that. Thank you. We try, man. We try. Can I look at ADA USDTC? USD? I can't even say it. USDT? Yeah, we can pull up ADA here real quick. Let's see here. This is my chart from the 3rd. What do we got going on here? Okay, so my chart from the 3rd here. Let's see. That would be back all the way down in this area. I had a wave 5 up here. We're continuing to, it looks like price is continuing to subdivide here. We've got some bearish divergence on the daily here showing up right here. Heck, all the way over here. So we've got a daily bearish divergence from around the 10th of February to now. Volume continues to remain high up there, which tells you there's a lot of selling. Selling, as you can see here, has come in back here around the 24th of November. Popped back up then again here at the beginning of January. Kind of popped up again here at the beginning of February and staying up there. And right now, again, we've still got a lot of selling coming in here. We hit the pattern target based on the height of the channel here, as you can see. Let me see here. 1, 2. I can move this up probably something like this here. A little bit more subdivision here in this red circle wave 3 here. And then it looks like maybe a 1, 2, 3, 4, 5. Maybe even an ABC as a 1, 2, ABC as a 3, 4. I think we've got maybe an ending diagonal finishing here. Maybe something like this. So again, it goes A, B, C maybe as a 1, 2, then A, B, C maybe as a 3, and then it'll have a 4, and then it'll have a 5 maybe. It doesn't look like it may have that much further to go here. What I would look for is maybe a decline below this ascending support here. But if you're dropping here below this swing low, this is your last swing low here before the next move down. This, let me see if I can get it here. 0.68560. If price drops below that, that should indicate that the top's probably in and it's headed down as a reversal now. But we do have a warning sign here with the almost a month-long bearish divergence here on the daily. See if there's anything fun we can see here. And not really. Went to 6, then 1, 2. I was looking at the TD sequential here. How's it look on the larger time frames? I mean, it's close. I can't tell. 87.9, 87.61. Okay, so slightly higher here, but definitely bearish divergence showing up right here on the 3-day. Let's see. Make all this right here. There we go. And again, that's from this same kind of area, the beginning of the first week of February there to where we are now. Still coming off there. Weekly's pretty high. Weekly's at almost 95 on the RSI. If we look at weekly, we're basically going straight up, guys. So I would be careful. There's probably a top coming in pretty quick here. We've ran all the pivots on the weekly. We're topped out on weekly Stochh RSI at the same time. Again, 95 on RSI. All this stuff screams that we're probably closer to a top than not. Even the monthly there is at just over 90 on RSI. Now, from the monthly, excuse me, this looks like maybe it could be a 1, 2, 3, pull back for a 4 and a 5 potentially. Just looking at, at this here. Unless, this is going to be an ABC down and ABC up, and then 5 more down. As an expanded flat. Let me see here. Where's that at? 39. 1.25 up there. It's a big move up. And normally in a liquid market, I wouldn't expect a expanded flat to reach so high. But in crypto, because of the illiquidity, we have to defer to the possibility that this could be, again, A, B, C, followed by A, B, and maybe C. And so then this just becomes a part of a bigger A, B, C kind of thing here as an expanded flat. But, again, other ways that we look at it, this is straight up. You look on the weekly. So, again, we've ran all the 5 pivots. All these things kind of suggest, RSI up there on the weekly at 95, topped out Stochh RSI, daily, weekly, bearish divergence for, almost a month now. I mean, all these things kind of are screaming that we may be at a top area or nearby. From a monthly standpoint, if I'm looking at this monthly, I would expect price to pull back at least to around this 34.6 area. There's nothing here to support price. So it's gone shot straight up, should come down hard. Again, you look at that idea of when you look at like this here, when you look at the parabolas, it's the same idea. You get up there so straight up, and then you drop, and it drops just as hard as it ran, especially at the beginning of it. Because there's nothing there. This is support right here on the monthly. Prior to that, you have maybe this area here. But, again, this is all just pretty much straight up here, other than this little bit right here, this wick on last month. Yeah, right there. So, again, I would look for, if we were to come back, there might be a hard move back down toward that 36 area. So, yeah. I agree. We can't create debt out of nowhere and not have serious repercussions. I agree. I think politicians are going to start putting money directly into people's pockets. It's what they're doing now with PPP stimulus, and it will continue as things deteriorate. Well, in order to get where I think you're going with that, they're going to have to change some laws. And so, if you're talking about a universal basic income, if they're going to do that, which I'm not even sure that they would, but if they do, they've got to change the law a bit. The law right now doesn't allow for that kind of thing. That would have to be something that basically comes from the Fed, and the Fed cannot do that legally right now. But I agree. There's got to be a repercussion for all this, and that's the credit bubble. That's what I'm talking about here. This is this idea that we are at. Let me show you something, guys. If you haven't seen this, this is an important thing to kind of take a look at. Let me see here. So if we look at the Dow Jones, right? Why? Because it goes back, all the way back early 1900s, right? By the way, this is the local move down here. This is not looking so good. It's not looking healthy at all. But let's zoom out here to the monthly and kind of show you the big picture, guys. This is the big picture here, okay? This is the cycle I'm talking about. From the height here in 1929 for the Great Depression to where we are now. This is that 90-year cycle, okay? The idea is that credit has expanded. It's pulled away. So if you look at, our growth, and then you look at the growth of credit, this is basically, let me see here, kind of what you'll see here. You'll see us up here pulling away from where we should be because of credit. So this, kind of where we're at here, is that popping of that credit bubble leads to a return back down there to that level. Kind of like this here. Now, I've shown you guys, maybe Daddy-O wasn't here when I showed it that day, but I showed you a chart that had shown how, how we've had this credit expansion since the 70s and how it's gone so significant. We also showed the fact that, oh man, I've shown so many things. We've shown what's really happened with the dollar since that time as well. A lot of things that people aren't paying attention to because they don't know they should be paying attention to. But this is what I think is going on here. So, yeah, I'm agreeing with you with the repercussions. Exactly. Which should send the economy down. Again, a depression-esque. Something potentially similar to what we had in the 1930s. Much more than a recession. Much more. The metrics that we watch here, guys, are well above anything that they had here in the GFC, at the height of the GFC. Right before that popped in, right there in 2007, 2008. Way beyond what we had here at the top of the dot-com bubble here in 2002. Well beyond anything we saw here right here. This drop right here in October of 87. Bloody Monday. Right here. Far beyond anything we saw back here in the 70s. Far beyond, even beyond what we saw here at the height of 1920s here, right before this. So our metrics are beyond skewed, guys. They are so far beyond, so far stretched thin, beyond anything that we've seen. So this idea that the economy is not going to have some sort of reset doesn't make a whole lot of sense. But then the question is, is it just a little pullback or is it a bigger thing? And I don't think it's much of a question. I think it's a It's an actual reversal for a bit. Now, the thing about this, if that happens, what's going to happen? What is going to happen? That means that people are going to go to the dollar. And they're going to go to the dollar because that's where people go when the shit hits the fan. They go to the dollar, guys. And the problem with that is this deflationary debt spiral that we're going to get with something that we would get with something like that on a larger scale. When you're talking about developing countries, we used to call them third world. Now we call them what? Developing countries or whatever. All of a sudden they're not going to be able to pay back their debt, their U.S. debt, because they won't be able to afford the dollars, because people are going to jump into dollars as a safe haven, which is going to cause the value of the dollar to rise, which means these countries with all this U.S. debt, they won't be able to afford to pay, which means it's going to have to be forgiven or otherwise removed, which is bad debt. That causes prices to drop, the value of things to drop. Again, that's part of this big, huge debt deflation spiral. You get foreclosures, you get job losses, you get companies going bankrupt, you get people that lose their houses, then continue to go down. And that brings the prices down. And at the same time, prices are already being depressed because the value of the dollar is rising. And so that has to continue until that equilibrium's hit. Now, after that, you could get inflation, sure. I think we'd hit stagflation first and then inflation. But I think, I still believe that because of the significance of where we're at in terms of a potential credit bubble popping, I think you necessarily have deflation first. And right now, the number of shorts, the number of people that are short the dollar, and they have been here, makes it a lot more likely. The market does not reward you for too long for being far off sides. You're usually going to get punished for that. Let me see here. Yeah, like I said, I don't miss anything on the tech side of it. But whatever you're talking about in terms of the tech side of it doesn't necessarily make it immune to what's going on everywhere else. And I think that's the misconnection that most people who are young and into Bitcoin are not understanding. They think that it's some magical thing that's going to make them wealthy overnight or down the road or whatever. So, they don't understand these other possibilities. What is so special about Bitcoin that says it's not going to react the same way every other asset denominated in dollars reacts? The value, if the value of the dollar is rising, necessarily the value of Bitcoin is going to drop. Because your dollars are worth more, which means you can buy more for less. The value is going to be less. I mean, that's just basic right there, as far as if the dollar, advances. What's going on? WhiteR21 says, heard today on Real Vision for the inflation argument, a guy justified gold going down, saying it's because people are going to Bitcoin for an inflation trade. Would like to hear your thoughts on that. Again, guys, my thought is still the same thing it's been with gold for years now. Let me show you guys real quick here. I think I've got it on this chart. So my larger gold thesis, yeah, here we go, is this right here, expanded flat. And this is basically the idea I've had for the last 5 years. I had to change it a little bit when we did make a new high. I was just looking as a regular flat, so an ABC down, ABC up. We made a new high, so it becomes an expanded flat, moving above there. But nonetheless, my idea, regardless of anything that's happened now for the last, since right about this area here, so 15, 16, has been that we are looking at this up and this move up here and then a move back down. Now, if you want to come out here and say, oh, it's because of Bitcoin now, say it all you want. I don't necessarily think that's true. You'd have to show those outflows of gold leading to inflows equal inflows of Bitcoin. I haven't seen anybody do that yet. I think it's a great argument to make. I think, I'm not saying it's not happening, but again, gold, Bitcoin, anything that's denominated in dollars is going to see its value decline in terms of dollars if the value of the dollar is rising. Now what that means is Bitcoin and gold and these things, they will, they'll pull back is what we would look at, right? And then they'd still, they'd reverse before the economy reverses. So, they'd start heading back up while the economy's still getting worse. So, as people start buying nearer the bottoms, that'll kind of get the move to reverse. But just like in March, just like at the top of 2008 there, when things drop, everything's going to drop at first. Nothing's going to be saved other than because the dollar's going to rise. Everybody's going to fly to the dollar. When the economy rolls off a cliff, guys, when the economy starts doing bad, risk off is the name of the game. Bitcoin is the riskiest asset that people are dealing with right now. So, historically, anybody that is going to pull money off the table in a risk-off environment is going to necessarily look at Bitcoin first. It's their riskiest asset. That's what they do. So, again, I think these are the very real things that people don't understand. They just think that everybody's like them. They got their $100 or $1,000 in it, and they're just going to hold no matter what happens. Well, these bigger people who have hundreds of millions or more in it can't afford to just hold on to it. Would you hold on if you had... I can't even ask you this because you don't know what you would do. You can say right now, sure you would. If I said, listen, if you had $500 million in Bitcoin and it dropped in half and it dropped 80%, let's say it dropped 80%. It was going down toward 80%. So, you're looking 500 million being worth about 40 million. Not quite. But anyway, let's say you have 500 million and it's made its way under 100 million. I mean, are you going to sit there and let it continue to drop off? Especially if the bad news is coming in and governments might start making it, illegal, which I'm not saying they're going to, but I'm saying if you had this, are you really going to allow it to drop like that and be okay with it? No, you're not. Most people are not. They can say they are right now without actually having that. But if all of a sudden your net worth drops from 500 million to 50 million, that is significant. If your net worth drops from 10 million to 100,000, that's significant. Don't tell me you're not going to, sell it along the way and try to retain that wealth. Now, if you've got that kind of hundreds of millions of dollars, you've got better access to intelligence. And you know that, you know what to do if things go into risk off. You put your money in, securities and whatnot, treasuries, investment grade treasuries that, that maintain the value of your dollar when you get out of them. You're not going to take the chance that Bitcoin's going to go down and then something's going to happen and it stays down and you've lost your wealth like that. You're not going to. Doesn't make any sense, right? But I think it's possible that maybe you've got some people in gold going into Bitcoin. Sure. But I don't know that it's necessarily what's going on here. Again, this is all happening as expected for 5 years, from 5 years ago. It just went up a little bit higher than expected, but generally what's going on is exactly what was expected. And so what's worse off for gold here is you've got this downtrend. So you've got a high, a low, lower high, lower low, lower high, lower low here. And so price is making these lower lows and it's making lower highs on less volume. There's no demand coming in there. That's the problem. Supply doesn't have to try very hard. And price still continues falling down. That's not what you want to see, right? But does that mean that Bitcoin wins? No. I mean, by wins, does that mean that gold goes ahead and drops off and Bitcoin makes some great move up and stays up? No, it doesn't. It doesn't mean Bitcoin can't go up now and even make a significant push. But I'm telling you what, if the economy is starting right now to roll over and the markets are going down, there's absolutely no reason for somebody of significance to hold a significant investment in Bitcoin, because they're already losing money with the equities and everything dropping off. The last thing they need to do is lose money with Bitcoin dropping off as well. So, again, things we got to watch out there. Sorry, trying to catch up to you guys here. You guys are all worried about my shelves in the back. We're moving things around, so that's why the books aren't up there right now. Moving things around. Let me see here. But yeah, so I mean, these are the bigger picture thoughts of everything. This goes beyond the simple, the dollar's going into hyperinflation, which I think is just absolutely a bunch of nonsense right now. Historically, if you study hyperinflation historically, then you know that so far the U.S. is not hitting those metrics that need to be hit. The fact that the U.S. is still the world's reserve currency makes it, I might even argue, all but impossible to hit hyperinflation. You need a country that, their currency isn't that significant in terms of the world. If you've got everybody in the world needing it, then, the world system is basically heavily relying on it, which means the idea that it can hyperinflate doesn't make a lot of sense. And of course, then again, you got to look at the printing of dollars compared to GDP and all these other metrics. And when you look at that, the Eurozone, Japan, these countries are a lot worse off than the U.S. is. But everybody just looks at that, oh my God, look how much money the Fed's printing. Again, and it's in terms of QE, so that's still a misnomer right there. Let me see here. So let me just kind of catch up with you guys here. Telluride says, I would never trade my physical gold or silver for Bitcoin. Like them both, but the government or a CME cannot shut off my metals. Well, but they can have you turn it in. Remember, during, 1930s or 40s or whatever, the government forced everybody to turn over their gold to the central bank there, to the Fed. So, I mean, they can do that, but they can do the same thing with Bitcoin. And you guys go, oh, no, they can't. They can't find me. Oh, my gosh. You are just begging for a federal prison sentence, aren't you? It is actually pretty easy to track your Bitcoin, guys, just so you know. If anybody here is in cybersecurity, they can probably back me up on this. They'll let you know. As a matter of fact, Tor is not, as you guys I hope are well aware now, Tor is not anonymous. I think it was the cybersecurity department students over there at Cambridge that actually broke the anonymity of Tor for the FBI because they were going after that pedo ring. Yeah, so that's not. But yeah, as far as Bitcoin goes, I think the one thing that you guys need to understand is anything that seems anonymous, if there's an electronic trace of it, at some point it's probably not going to be anonymous anymore. The US dollar, hand to hand, is the most anonymous trade out there, guys. But if you're pulling it out of the bank, they're tracking it. The federal law here in the U.S. is if you deposit or take out more than $10,000 or more, then the bank has to notify the government. And they strongly urge them to do so at $5,000. Again, the government's tactics for strongly urging, we all know how that works, right? So, it's crazy. It's crazy. Let me see here. Sir Hole, what's going on? He says, Michael Saylor got ruined back in the dot-com bubble. He was the biggest loser. He lost $13 billion. History repeats. Yeah, again, guys, and I don't have anything against Saylor personally. I'm really concerned with those of y'all that are prophesizing him, make him into a prophet or a or a king or something, or a god among your eyes, because the reality of MicroStrategy here, let me show you guys. This is the reality here. Let me kind of zoom this out a bit here. This is MicroStrategy, guys. If you've never looked at the chart, this was the height of the dot-com bubble. They were one of the best. This was their low at the end. They lost almost 100% of their value there. They dropped from, $3,300 down to like $3 or $4. Since that time, they moved up right here where they were prior. Right here, they got up there about January of 11, right? QE, this is QE, guys. This is when all that money was coming out, the asset inflation, right? They did absolutely nothing with share price until they bought Bitcoin. Here's the problem. Here's IBM. Everything's indexed to 100, so they're all, equal in what they're looking at. You can see that IBM went well above, and now IBM's fallen back now. But they were well above them in here. If you put money in IBM instead of MicroStrategy, you would have made a killing. SAP, again, would have made a killing compared to them. Microsoft, again, would have made a killing compared to them. CRM, these are their competitors. They were the laggards, guys, of business intelligence. Their recent rise in price is not due to what they do as a business. It's due to them just buying some Bitcoin. And what does that tell you? What that should tell you is it seems like it's more of an attempt for them to try to do something to remain in business, which means that if the economy rolls over and if Bitcoin rolls over, they're screwed. They are absolutely screwed. The only way they've been able to rise in the period of asset inflation here over the last 10 years, where all their competitors were flying high, they weren't doing anything. If you put your money in MicroStrategy, you lost money compared to any other business, most business intelligence companies that you could have put money into. They just went sideways. Everybody else exponentially rose. This is called a laggard in the sector. You don't put money in laggards. You shun them. They lose money. They go out of business eventually. If I look at this, and if I'm honest with it, and I look at this as that is, to me, this really just seems like nothing more than an attempt to try to get the value, to get the company to gain some kind of value, because they couldn't do it with their core business. They weren't doing anything with their core business. 10 years of sideways while all their competitors were going through the roof. They have lost so much market share in business intelligence. They're like, the last thing I saw, they were at 2.3% of market share. That put them like at 10th or 11th. 9 or 10 companies doing better have a greater market share than they do. This is not great leadership. This is not a company that's doing extremely well. If I'm buying stocks and I'm looking at a business intelligence company, I wouldn't be looking at them, because they have done nothing with that. That's the reality of it, guys. I mean, he's really kind of put everything into one basket here. If this craps the bed, he may be done. He may be done. Maybe. We'll see what happens. You can see here on this rise from June 2nd over here, when they hit their low of June of 02. To where they are now, they've begun kind of printing this channel, this ascending channel here. So far, it looks like just an ABC. So if that's an ABC, they should come back. So we'll see. I don't know what's going to happen for sure. But if I'm looking, at Saylor and what he's done, I'm not thinking that he's all that great, doing all that smart right now. Because what happened here for 10 years? What happened? Other competitors all took off. They just sat there. That's not good. And then all of a sudden he buys here. Back here, 2013, 14, whatever, he was talking about what a useless thing Bitcoin was, which most people were. To be fair, most people were at that time. But I have to consider all that in all this when looking at his recent purchases and what they really mean. He's hoping, I think. I mean, that's what this screams to me. So yeah, Sir Hole believes that he's going to definitely sell, regardless of what he says. He already has a plan to sell. He needs to. I mean, it's stupid, dude. Guys, you don't buy billions of dollars of Bitcoin without a plan to sell if you need to, especially when you're buying it on debt. He sold debt to purchase. The couple of he's got a couple of $1 billion worth of Bitcoin now, right? Supposedly. There is a company that we know that's going to sell 750 million of Bitcoin here coming up. If you guys might know who that is, I forgot who that was. But they said they want to sell most of their Bitcoin holdings, about 750 million worth, over the next few months here to purchase more ADA and Polkadot, I think is what they said. I don't remember who that was, guys. I can't think of the top of my head. But you might want to look that up if you haven't heard of that. So we can expect 750 million potentially to enter the market. Hopefully they can do so off market, over the desk, over the counter. God, I can't even say what I'm saying here. And then in that way, it doesn't directly affect, Bitcoin pricing right then or anything like that. But if they have to resort to selling it on the exchange, guess what, guys? There's 750 million worth of selling pressure. So I don't know. We'll see how this continues to play out here. Stefan says, I think you're saying if he's been stupid for the last 10 years, then what's being stupid for the next 10 years? Oh, man. Sean, he says Saylor has been charged with fraud by the SEC in the past. Yeah, but here's the thing. A lot of people are, many times inadvertently, sometimes trying to game the system. So I'm willing to give him a bit of a lean on that, give him a bit of leeway on that, but because, there is a lot, guys, you have to understand securities laws are so convoluted that, in your course of trying to do business, you may accidentally violate something, and that happens a lot more often than you might think. So I'll give him that maybe it was something there. I haven't even actually looked at that, but in charge, was he found guilty? If he was just charged, if he wasn't found guilty, then there's that as well. What's going on, Glenn? I'm talking about Saylor and MicroStrategy. Let me see here. Hank says at least Saylor had 13 billion to lose. That's true. Mark's bringing up the point that they can track serial numbers on bills, so everything to a degree is traceable. That's how dealers get hit with control. Yeah. You can do that. It's a lot more difficult to really to get into that type of level of privacy, I guess. So unless it's really big, something huge, they're not going to go after you looking at your trying to follow the trailing the serial numbers there. But if you're larger, yeah, definitely. Let me see here. Excuse me. But yeah. So that's kind of what when we're looking at that. And again, guys, I know many of y'all are not going to get this, and I get that. I hope if you're anybody that spent some time coming into here, I hope you understand who I am and what I'm trying to do here. I'm not trying to disparage Michael Saylor or anything. I'm trying to help you understand when you might be becoming emotionally attached to a trade or an asset, because that emotional attachment I can all but guarantee you lose you money. But many times we get so involved in it and we get caught up in it, we don't even realize that we're doing it until we lose. And then we're like, what the heck? So, again, this idea that, everybody's basically making Saylor godlike in the way that they view him, the laser eye nonsense, all this silliness. This is strong recognition of emotional trading going on. And if you're in that, you want to be careful that you recognize that you're doing that potentially. And so that way, you can make sure that if you've made money, that you're not being blind to the possibility of something happening and then have to lose it all. Making paper gains mean nothing, guys. I got people talking to me all the time. Oh yeah, I've been holding for 3 years or something, or 4 years. Yeah, I'm worth this much or whatever. It's on paper. Until you actually cash out, you ain't worth piddly do. Yes, I said piddly do. So again, guys, you got to be careful with that. Being healthy on paper is not the same thing as being healthy, in reality. Until you actually lock in those profits, they're potential profits. So you guys got to remember that. Nobody's ever gone broke taking profits, guys. Nobody's ever gone broke taking profits. Many people have gone broke and worse, holding paper profits, expecting it to go up higher and higher, and never selling when they should have to lock in those profits. So yeah. I don't define piddly-do. Yeah, and then there's all this stuff going on with Elon. I know there was this thing pushing out there that the SEC is maybe investigating him for, the Doge comments and whatnot. I don't know if that's true or not, but I have mentioned before that, our laws, if you look at the spirit of what's written, which we often do, or which the courts often do, there may be something to be said for having a significant social media following, and then talking about investments and whatnot openly about that, because I think it's possible. There's an argument I think to be made that they could say that he is manipulating the market because of his following. So, I mean, that's something I've warned that is a possibility. I don't think it's anything we've actually seen really seriously taken to court yet. But that is something I've been talking for the last 2 years. And now with Elon doing this, I think it's a possibility there. It doesn't mean he'll be found guilty. But, our laws as they're written don't, address specifically social media, which has become so huge now. But I think if we look at the spirit of some of these laws, I think that you could find an angle, a novel way to approach that law in which if you do have some kind of significant following like that, and that your mention of certain things moves the market, and you talk about them like that, then it may be able to be argued that you have some kind of responsibility there, in that you're not taking, to keep quiet about it. Maybe it does. Again, I'm not saying that he would lose, but I'm just saying I can see an area in which something like that may happen. But I haven't seen anything official from the SEC saying that he's being looked at or anything. And even if he is, they may decide that they can't make the case. So we'll see what happens with all that. But I think if you have any kind of significant following like that, I think you do have to be careful. Unless you want to deal with the SEC. And, man, you don't want to deal with them. Trust me. Hey, what's going on, Leighton? Good to see you, man. Any thoughts on inflation? Man, you're going to have to scroll back through here, watch this video. I spent a whole bunch of time talking about it. So, yeah. So we got that there. What are my thoughts on commodities skyrocketing? Which commodities in particular you're talking about? Because, gold obviously and silver are not skyrocketing. If you're talking about things like lumber, see, do I have it in here? Lumber futures. If you're talking about stuff like this, or maybe, I haven't looked at wheat or corn lately. Maybe that's what you're talking about, something like that. Let me see here. So when you get this kind of thing where all assets are spiking, I've talked about this before, where you've got everything kind of spiking. So you've got stocks going to all new time highs just stupidly. You've got your commodities all flying high. You've got Bitcoin flying high. Everything's going up when it shouldn't all be going up like that. usually that is a clue that there's a significant cycle top at hand. Because usually this doesn't happen. Usually all these things don't go crazy at once. And so the fact that they are, I think just kind of says, it's the end, it's trying to get to the end of that bubble, the top of that bubble. I mean, this is lumber here, straight up. You kind of over here, start getting more straight here, and then just straight up. So, again, to me, that says, this is the monthly chart here, that says probably a significant top incoming across them. Copper, oil, cocoa, corn. Yeah, that's what I thought you were talking about. Yeah. Again, that's what I think. Because generally, you'll have equities go up or you'll have commodities go up. You don't usually have them running so strong hand in hand. And to me, well, it's always about when does something weird happen in the market? And that's weird. And so usually these types of things happen in more significant, longer cycle tops. And so what we're looking at in terms of the Dow Jones and whatnot is that grand super cycle top, potentially in right now or around this area that we've been trying to look at it topping out. So that's a very significant cycle top. And usually, again, you'll bring everybody, because it's, again, all this right here, it's the everything bubble right now, the credit bubble. Everything, going up. And so that's what I kind of think about that. Yeah, no, there's a lot of home building and whatnot going on, Stefan. And usually, that's when you're going to see this kind of thing rise. Imagine this. All this new home buying that's gone on and home building that's gone on because everybody's kind of done this exodus over, especially the last year here, with the pandemic and everything, all that move out of the city. Imagine you're getting all these built up and then all of a sudden the economy goes off the edge. Now you're going to have a ton of supply. More, and this is where we start talking about the debt deflation spiral. You're going to have people losing out on their mortgages there, going bankrupt, foreclosing on mortgages is what I meant to say. So this is all going to cause prices. If you're selling houses at a discount at auction because you had to foreclose on it, because as a bank, you can only hold so much of a percentage of your assets in real estate. These are federal laws here. So you have to sell them. So you have to take whatever you can get for it. So you're trying to auction off in an economy where everything's dropping off already. The houses that are finally getting through these auctions are going to be lower price. And that means that your surrounding houses are going to drop in value as well. So again, we talked about that debt deflation spiral where assets are losing value just because everybody's going bankrupt, getting foreclosed on, going out of business, all these things. So the prices necessarily drop as a result. And then on top of that, they're already dropping because the dollar's going up. It's just this huge, continual thing. So if you want to buy a house, I hope you got some money saved up. I can tell you what, if we have anything like what I'm thinking here, I'll be buying more than a few. Because the discount should end up being quite significant if that happens. Yeah. So if that were to happen, again, that type of thing where the economy comes off the cliff like that, that's going to cause a lot of foreclosures and auctions and homes, which is just going to depress everything else when they go out. Home prices are such a huge part of the overall economic condition, especially here in the U.S. So when you see that start taking a large hit and start turning the other way, it affects everything. It brings everything else down with it. And I think that's something what we might see, especially with this glut of new homes that are being built here. We've got a home that I've seen for sale, just north of San Antonio. They're trying to sell it for about $800,000 right now. It's almost 13,000 square feet, unfinished. So the guy that was having it built couldn't afford to continue having it built. But yeah, like I said, just about 13,000 square feet. They're trying to sell it right now for $800,000. Owner, very motivated to sell, according to the realtor. We're starting to see a lot of the more expensive homes here, even with San Antonio, which is they say it's the recession-proof city. we're seeing a lot of these larger homes starting to drop their prices. $2 million homes starting to drop, 20% on their pricing and whatnot. So we'll see how that continues to play out. But I don't like the signs of that. If I were to buy a house today, I wouldn't like the signs of that. But in a year or two, that might make for some pretty great buying. So, yeah, 800,000 USD. Yeah. Trying to call bubble tops is really difficult. All the signs have been here. They started in 2018. They've really ramped up over the last year. I think if it's going to, it's probably going to be much sooner than later. I would think probably this year at this point, based on the way everything's going. Oh, it might have already happened here. If we look at, like I said, we look there at the Dow Jones. We can look at the S&P E-minis here. And we've already got a significant drop right now from the tops here. And what's going on now? It could still be ABCs, but it's definitely trying to make an argument for it. If we go here to the Nasdaq, now, if you guys remember last year, I talked about that when the market finally did roll over, it was going to be led by Tesla and technology in general, which means the Nasdaq. There's your Nasdaq already dropping off there. But again, could potentially just be a pullback before maybe subdivision of waves going on. But they're all taking a pretty good hit this week. Bonds are doing their thing. The dollar has continued to rise off here. As far as the dollar, until it actually gets below the swing low here from January, this could potentially be the bottom. Right now, cleanly, it looks like we've got an ABC. So I'm thinking we might actually have, this might still be that fourth wave. We might have a triangle maybe going on. So we'll go A, B, we'll get C, D, E, and then we'll have one final drop down there, which should just take it probably in the 88s here, I'm thinking. I could go down lower. Hank might still get his target in the mid-80s there. But, if this continues pushing up here above this 91.6 here, if it gets above there, that starts making a strong case for this potentially being the bottom here. And when you look at that and what the bond market's doing right now and what's going on with the equities and even Bitcoin at this point, there's a lot of confluence in the idea that maybe the dollar could be bottomed. But until we at least get above that level, and then, of course, really we need to get above this wave 4 up here at 94.75 or whatever. We really need to get above that. But, if we're above that, dollar bottom is in, which means everything else should find its way down in relation. So, yeah. I would care to discuss bonds and treasuries, but it is 5 after 1 already, which means, unfortunately, I've been here a couple hours. The best commentary, I think, right now that you can get on that, maybe follow Colorado Travis, again, Santiago Fund. Stephen Van Meter, follow him as far as bonds go. There's a few others that I have that I can't recall off the top of my head right now. I can kind of see their little Twitter picture, but I can't recall their names at the moment. But I'll see if I can talk about them, next week, a little bit more on there. Yeah. What do I think about the concentration of dollars in Bitcoin and Ethereum this time around versus the ICO and altcoin craze in the previous rally in 18, 17? Do you think we will see something similar? Let me see here. So, I think there's a lot of similarities as it stands right now between where price is in Bitcoin and where it was in 2017. So I already think that there's a lot to be said between here and here as it is. Gotta take some stuff off here. I mean, again, quite similar, structure with everything going on there. You could look maybe at DeFi as being the ICO. We had the ICO back here. DeFi might be the thing here. But, as far as it goes, the weekly right here, it looks like we still got a couple of days left, but the weekly may close below last week's, which would give us a bearish engulfing. But we still need to see next week follow through with lower move as well. Otherwise, it's just a pause before heading further up. Again, the monthly, I'm really interested in this. I don't want to see the monthly closing below last month's high, which was 41,986 and 37 cents here on Coinbase. I don't want to see the monthly closing below that. I especially don't want to see the monthly closing below last month's close, which was 33,137 and 74 cents. Now, obviously, today is the 26th. We've got just over 2 days left in the month. As I've said before, I don't really think that that there's much of a chance that we'll see the monthly close below that 33,137 level. But, we can't guarantee it's not going to. So I don't want to see it close below last month's low or last month's high. I definitely don't want to see it close below last month's close, because that means we'll close the month out low below where we started it. We'll have 2 months of very large wicks, and this one right here we have, and we'll have to see what the volume looks like when it plays out and everything. But it creates a whole host of problems if we're closing below that 33,173 level on a bigger picture, I think. So, we'll see there. We'll see. Yeah, I like Stephen Van Meter as well. Yeah. So, yeah, we'll see what's going on here. As far as this continues to play out, like I said, I'm still thinking we're going to have at least one more, leg up. But that's contingent on how this turns out with where we're at locally here right now. So, this is the same thing, I talk to our Discord members a few times a day about. We continue to look at things and how they're playing out, and, how does that change what we're looking at and the possibilities. So we'll continue to do that as it does here. But again, we've still got the targets we got that I talked about at the top of 2 hours ago. So we'll see how this continues to play out here as it does. So, that's where we're at, guys. Hopefully it makes some sense to you. Hopefully maybe you learned a little something extra today that you might not have known. That's all I'm trying to do. I'm not trying to convince you that what I talk about here, big picture, is definitely going to come true. What I'm trying to just get you guys to do is understand the markets are not what you tend to think they are, and that they move a certain way, that things mean things different than what you tend to think. Now, whatever results you want to derive from that understanding is wholly up to you. And there's no guarantee that even if you understand these things, that you're going to come out to the same thoughts I come out to. But I think it's important that you at least understand, how these things work, most likely, and what they kind of do and where they may lead. And then for me personally, I kind of let you know, what I'm watching and why to me it's important. How does it make sense in terms of what's going on now, what's going on historically, things like that. Because at the end of the day, I'm not here to tell you what to think. I'm just here to help you understand how to think about it a little bit more. Because, most people haven't taken any kind of advanced econ classes or done a lot of studying about it. Most people, it's a very, very boring subject. But I think, honestly, if you're in these markets, I think, you could trade without them. But I think if you have a bigger understanding of that overall, I think it helps you be prepared for a potential real big, top and what you can do there, because most people aren't. Most people think, it's just going to keep on going up. It's the start of a new bull market with Bitcoin and stocks and everything else. And I think the evidence is a lot more likely the other way. But we'll see. We'll see. That doesn't mean you can't trade up right now. Even with these larger macro thoughts, it doesn't mean that you can't trade the advances. You can talk to our members. When we're talking about this, it isn't, sell, sell, sell all the time. If there's a reason to buy, I tell you, let's go ahead and buy and look for these levels. I kind of let them know when things are sitting up here. Listen, we're looking at this level and this level. If it goes above this one, then these are the targets we're looking at. If instead it goes down below, then these are the targets we're looking at. And it just helps you understand. That way, depending on whether you think a price is going to go up or down, you've got something more to look at as far as, where your validation, invalidation levels and whatnot may should be with that. So, yeah. But anyway, so there you go, guys. I'm done. I'm going to get out of here. I've gone well over. I've got a lot to do. But I do appreciate you guys joining in. I really do. And believe it or not, guys, even when you have a different opinion than me, I don't have a problem with that. Only problems I ever have in terms of people having different opinions than me are in their delivery. If you come off like a pompous jerk and you're just trying to be an ass, then, I have no time for you. If you want to really talk about it, yeah, we can really talk about it. And you may convince me that I'm wrong. But, you have to understand that my positions that I have are based on a whole lot of time doing this, a lot of education, a lot of experience. So they're not just, something I pull out of my rear end. And I hope that your positions will not be as well. But even if they are, I'll talk to you and tell you why I don't think some of the things that you're looking at mean what you may be thinking they mean. Doesn't mean I'm necessarily right. But there is something to be said about having a certain time and education in a subject matter and a certain experience in it. Again, if you've got something wrong with your vehicle and you go to your mechanic, are you going to argue with them? Oh, no, it's definitely not that. If you don't have any clue what's going on, if you've had just a real cursory look, or you go to your doctor and they tell you, well, it looks like this may be going on here. You're going to say, oh, no, it's definitely not. Some people may. But you tend to defer, and maybe you get second opinions, and that's fine as well. But you don't immediately just shake somebody off that has that certain level, I think, of experience or education in something that you're talking about. Again, whether it's doctors or lawyers or, accountants or whatever else. But again, that's why there's always second and third opinions and whatnot. And, because nobody's ever guaranteed to be exactly right all the time, right? So there you go, guys. All right, guys, listen, I'm going to get out of here. You guys have a great weekend. Join us. We'd absolutely love to have you here. Join us at howtotradetowin.com. We've got lots of room for you. It's all the Discord access is automated now, which means I can start working on the back end of the site here and add a few things that I wanted to add for y'all. So we're just going to keep adding to what we offer you guys, with the different tiers and whatnot. And we'll do all that. Other than that, we'll be back Tuesday at 11 a.m. Central Standard Time to take another look at the market. So hopefully you can join me then. You guys have a great weekend. And remember, the only thing you control in the market is how much you lose. That's it, guys. So risk management is the most important thing you'll ever learn, the most important thing you'll ever do day in and day out as a trader. All right. Take care, everybody. Have a great weekend.